Well, good morning, folks. Welcome back to the channel. Happy start to a new week. I have an exciting earnings play this week. This is definitely a gamble, but I have a feeling it may pay off. We'll see. So JP Morgan, they have earnings coming out in 2 days. So today's the 11th. So by April 13th, earnings are coming out and I expect an earnings beat. And right now there's some call options flying under the radar that have the potential to really shoot up fast. So those of you that follow my channel and follow this could be a very great earnings play if you follow along here. So let's look down here at, so the last four earnings reports, they tend to beat earnings every quarter, but the earnings projections have been lowered significantly for quarter one. So this shouldn't be that difficult for them to continue to beat. As you see here, the white circle, that's the projection, and then the green filled in circle is where the actuals come in. The actuals consistently seem to beat the projections. So by quarter one 2022 earnings, when they're released April 13th, I'm expecting an earnings beat. And I'll show you some very cheap call options here that may be a great opportunity. I actually got in this morning and I was already up like 35%. And for those of you that think, whoa, 35%, like on this was only like $65. So don't get too ahead of yourselves, but we could do a lot better. So I looked about a month out. I looked at May 20th. This one has weeklies also, but the one weekly that I looked at was just I think it was already worthless. So I'm going to stick to well, I did stick to this because I already did it this morning. May 20th, and let's look at a strike price close to where the stock's 52-week high was. So the 52-week high was around 172. I picked 170. Let's see here. Yeah, so May 20th, expiration date, 170 strike price. And you can see it's already up 28% today. What did I say, 35%? It's dropped back a little bit, but it was 7 cents per contract this morning. So if you could put a couple $100 into this, you could make a very cheap investment with potentially a ton of upside. And let me show you. So like I said, up 28.57% today. If we look at the history on this thing, back when the stock was $40 higher, at its pretty much close to its all-time high at the beginning of the year, you can see this option was around $8 or $9 per contract. So you've got a huge potential. If this stock makes a massive move upward, it's not, there's no guarantees with this. Like I say, this is a gamble, purely a gamble, but I think this is worth a shot if you can risk a couple $100. And let me show you here. So at 9 cents a contract, well, this morning when I got in at 7 cents, remember you multiply by 1,000. So 0.07 times 1,000, that's $70 for 1,000, because it's, remember, it's 100, right? For 10 contracts, it's 100 times 10, which is 1,000. I actually wagered 2,500. Let's see here. I wagered $175. So instead of buying 10 contracts, I bought 25 contracts. So 25 times 100, that's 2,500 times 0.07, 175. And it's already up to 9 cents. So it's gone up 2 cents. So right now that's about I was at about a $25 gain so far. But if this just gets back to where it was, $8.89, let's do 889 times 2,500. So you're talking $22,000. So you're talking, you could turn a $175 investment into $22,000. Let's hope that this earnings report is really good and this could be a nice quick payoff. Now, if this thing doesn't move right, like I say, your maximum risk is what you've invested. So your maximum loss is the $175. So if this thing moves against us, just get out of it. If you buy to open, the opposite is sell to close. And remember, these are not recommendations. This is just educational. So this is just we're looking at a trade for educational purposes. Take it or leave it, right? But if you were to do this, you buy to open, the opposite is sell to close to get out of it. I would say if we do have a good move in this market, you don't want to press your luck too much. If you're sitting on a nice gain, you may want to take it within a week. You don't want to hold it because of theta. You don't want to hold it too close to expiration. So if it keeps moving, maybe wait a week, sit on it, and then sell it, sell to close. But that's the gist of that. I think this could be a great opportunity, and I'm really hoping that this could help turn things around this year as far as options trades. So hope that was valuable to you. If you like that, please remember to like, comment, and subscribe. Take care and have a good rest of the week.